I wasn't totally convinced the 5% pullback we did was enough, but we'll see. I do think, though, that we've got some strong economic tailwinds in place. And I do think that sort of supports the idea of rotation away from the Mag 7, the large cap growth trade. So we've actually, I think similar to what one of your earlier guests said, we've been telling people to look at things like materials, energy, financials, and also utilities, which have had a nice move recently.
Lori, we're pretty much through the earnings here. We're going to get some retailers this week, of course, including Walmart and some others. What's your takeaway from earnings here? Did corporate America kind of earn their way into the multiple, do you think?
So look, I think that reporting season was fine. It wasn't anything to get too excited about either way. I think if you go through and you look at the beats on both earnings and revenues, we saw very strong rates of earnings beats. They were less strong on sales. And we've seen that for a while now. But what that's telling me is that corporate America is finding a way to get it done. And we should applaud them for that. But we should also recognize that they are finding a way to get it done. And they're really navigating through a tough cost environment. So I think the numbers are good. We've seen the consensus estimate for S&P this year go up to 245 again. That's basically where we were last summer. Usually that bottom-up consensus is in the right neighborhood by the time we get through this reporting season and into June. So I think that we've managed to go through it without too much damage. And there were a lot of bears who were saying the numbers were crazily too high, needed to come down, that was going to destroy the market. Well, that didn't happen.
Hey, Lori, I know you and your team, you really go through the earnings transcripts to kind of get a sense of what corporate management teams are focused on these days. What did you take away from the most recent round of earnings?
It was an interesting exercise. It always is. We've been doing this for a few years now. I would say, one of my main thoughts as we've got these big inflation prints coming out this week is that while companies, certainly weren't saying that the cost environment was good, it was a pretty balanced discussion. So we had some companies saying, well, costs are elevated. Others were saying, well, input costs have come down, or things are normalizing, or things are moderating, or we're maybe calling out something like freight expense that had gotten a little bit easier. That really contrasts with what we heard in the last reporting season in January through March, when it was almost very uniformly a kind of hot inflation commentary, if you will, where it was just nothing but negative, negative, negative. So that makes me feel a little bit better heading into these prints. I'm still a little bit nervous, that the economists, haven't figured out what they got wrong in the first quarter. But admittedly, the company commentary has been a little bit better on that point.